Hi, this is Steve Hutchinson with Hutchinson Family Office, and this is the third in a series of videos that we were put together for the month of May. And in the first two, we're addressing volatility, economic considerations. We talked a little bit about the Federal Reserve in our second one. And this one here, what I would like to discuss is where the political influence of the situations we see in Washington, D.C. and worldwide, and how that might be affecting our portfolios, if you will. I've often said many times that the stock market really doesn't pay attention to who the president is. They watch his policies. They're more interested in the policies of a president than whether he's a Republican or a Democrat. And you can throw shade on either one of them equally when it comes to the equity markets, or you can support of them differently. It's interesting that since this president was elected, the financial markets are up. And if I told most of you that, you would be surprised. You know, but from inauguration day to today, even though it doesn't feel like it, the markets are up. They're not down, they're up. And we've had quite a bit of pullback. We've had a significant pullback in the financial markets year to date. And so what we're seeing is we're seeing that the financial markets are making a shift. Now, how do policies in Washington, D.C. affect your portfolio? Well, first off, we made some shifts earlier in the last year, late last year, actually mid last year, by putting more energy assets into the portfolio, because we believed at that particular point the current administration was not as pro-energy as we would have expected. So we felt that the demand for energy, oil, gas, natural gas, was going to have a considerable upside opportunity. So we basically went into that particular sector based on political influence. Now, when you sit back and you take a look, well, is the current administration addressing inflation? They're somewhat conflicted in that the current administration can do very little about inflation. They could come up with a policy of maybe not spending as much money. Spending certainly does cause inflation, because the more money that's in the supply system, the more demands for goods and services. But it also, you have to have some type of underpinning in the economy to keep people from falling through. So can the government actually, can the political administration combat inflation? That's questionable. We weren't very good at it, and during the years with Richard Nixon, we weren't very good at it with President Ford, and we were horrible at it under Jimmy Carter, and that was 2 Republicans and 1 Democrat. So quite frankly, inflation is not exclusive to any particular political party. So our advice to our clients is that inflation is a concept, and what the government does as a concept we have to deal with, or a reality we have to deal with, and what the government's policies are, we need to look at those policies and determine what industries are going to be significantly impacted on the positive side, and unfortunately some on the negative side. Companies that basically are strong at this particular sector, we're seeing, of course, energy companies doing very well. We see some of the policies coming out of Washington, believe it or not, even though their policy about drilling for oil and gas is quite different from the previous administration. We're actually seeing the investments in oil and gas become much, much more profitable. So oil and gas investing is somewhat profitable. We're starting to see development of real estate slowly become more profitable. We're getting ready to come out of a period of inflation. I know at this particular filming, I'm expecting the president has made some type of comments about his systems to combat inflation, but honestly, there's very little he can do. He can only strengthen the supply chain, get as much into the markets as we can, but unfortunately, we have a restricted supply chain, and that's going to be an issue. So our perspective is that the economy is not going about swimmingly, but at the same time, there are some concerns about inflation. I mean, I think they're short-lived. I don't want to say they're, for that short-lived, but we do have inflation. And we've gone through a period, go back 10 years or more, of zero inflation. So we're kind of paying the pauper, if you will. So our recommendation is look at your portfolio carefully. I had a conversation with a gentleman recently, and he asked me, so what do I do? What do I do? And I said, well, first thing you need to do is sit down with your advisor and make sure that your portfolio is properly positioned to combat where we are today in the economy. You need to ignore the noise that comes out of these political administrations and focus on what your retirement plan or your estate plan or whatever that plan is for you and your family economically. And that's the best advice I can give you at this point. So stay focused. We're not concerned about a recession. We believe there's a possibility of it. Of course, economic cycles to come and go. We do believe in inflation in the short run is going to be an issue, but we do believe that once supply increases, that we would see some adjustments in inflation. And then, of course, we do believe the financial markets, the majority of companies as we come out of this earnings season are doing really quite well on earnings. So we feel very solid about overall equity markets. Now, not been a good year, but we can always hope for more. And that's what we do. We focus on those things we can control and not those things that we can't. So that'll do it for this video. I want you to think very carefully about your portfolio and try to filter the noise that you need to deal with and make sure your plans are in place. That'll do it. Thank you.